Sweet.
Thank you for coming by here. I visited you in your new offices a few days ago in Paris. So you're a new city, new offices, still has the new office smell. You're new in the job. We have a new commission, a new parliament. It's all new. So what do you want to do? Where do you want to lead this organization over the next couple of years?
Well, you said everything is new, but the organization is not new. The organization is young, but not new. It's got already a little bit of a track record, and I would say it's a pretty good track record. So in that sense, I don't think that it's a situation where things need to be fundamentally changed or fixed. It's more a situation of continuity. I think Andrea the previous chair did a very good job in building the institution where it is. And also, to a high degree, the mandate of what the institution has to do over the coming years already it's been dictated. You know, as you know, a big chunk of our work is the implementation of regulatory technical standards and third-level legislation that comes out of first-level mandates. We just, in the European Union, just finished the big banking package, and there's a large amount of work that comes out of there for us for the next coming years. We also have this call for advice on the finalization of Basel III that we're finishing now and probably sending to the Commission by the end of July, and that will probably come with additional work for later on. So in that part of the agenda, I think has been set. You know, nevertheless, there are other areas in which new emphasis is being put forward: ESG, fintechs. AML is another issue which in the new SS regulation that has come forward. We have a bit of an enlarged mandate there, and I think it's useful and important. Also, we have had now 10 years almost of experience on the stress tests in Europe, in the European Union. The EBA has been in charge and has a mandate to adjust those tests. Andrea, before he left, he already pointed that maybe it's time to reflection. I think that's probably somewhere in which we need to go forward. So within the structure that we have a large part of our work is pretty much laid out for us, but we do have some margins around these final areas that I said.
Are there mandates or guidance? What's your wish list for the new commission? If they call you in and they say, okay, give us your wish list, what would you like us to do? Is there something you would like out of Brussels going forward?
Well, I think so. I mean, I think that there's comments that have been put forward here clearly. I think that fragmentation within the banking union is still a fact, and regulation can move forward in that direction to try to favor that. At the same time, part of the financial innovation aspects, need to be make sure that we are able to put forward the regulation that properly treats that financial innovation and allows Europe to be a competitive environment for providing banking services domestically to our citizens, but also in a global context. So I think those two areas. Third, on AML, as I said, we have a limited mandate there, but I think that probably the EU could benefit, for an enhanced harmonization and regulation there, so that then the effective harmonized implementation can actually take place. Because if you start with large differences on the fundamental regulation that can be applied, I just heard Sylvie saying that it's fundamentally national.
Right.
Well, that's basically, I would probably agree with that. That makes it very difficult to get effective coordination and at the same time to have a homogeneous single market in the context of the EU. So those are areas in which I feel we can work.
You and I chatted about AML in your office the other day. I'm going to come to it in a moment. But maybe I should just back up and ask you, how do you see the banking sector in Europe? What is your assessment of the health and outlook for the sector you oversee?
Well, I think that we have come forward a number of analysis, and we do our annual vulnerability assessments. And I think basically in terms of balance sheet, things are good. Obviously, capital has been improved tremendously over the last 8 years. So solvency of banks is much larger than it was before. The movement on NPLs is in the right trend. It continues to go on the right trend at a decreasing rate. I think in that sense, that's probably okay. The part that's been more of a concern, I think, from the point of view is, I would say, basically sustainability of business models and profitability. Right. We have been, for a number of years, I would say almost for 8 years now, in which the average return on equity and the average profitability of the banking sector in Europe is below the cost of equity.
Right.
And that's a big challenge. That's a big challenge. That has to somehow converge. Banks are doing work, but however, that work doesn't seem to materialize. Cost-to-income ratios do not decline. Mm-hmm. It's probably income is challenging, but the cost adjustment is keeping up with income, but not enhancing that part. At the same time, they need to invest in technology for facing the innovation challenge that we discussed before. So I would say that's probably the number one concern right now. After an economic cycle that has been good for a number of years, with an outlook that looks that it may not be necessarily better, and it could be actually worse, and profitability below what it should be to cover cost of equity on average in the industry. Of course, on banks, there's a wide dispersion there. How robust is really the balance sheet that we see. Or are we going to see a rapid increase on NPLs and a fast deterioration? I would say that's probably the biggest. A quick summary, but probably the biggest challenge.
You've got to earn your cost of capital if you want to stay in business, without question. And is Europe overbanked? Are there too many institutions?
Well, that's one assessment that people make sometimes. I think that differs a lot by different parts of the European Union sector. Of course, by absolute number of banks, you could say that. There are many, many banks. But as long as business models are sustainable, I would say that's okay. That's okay. I think that part of the challenge that we have is trying to find adequate banks, for the single market as a whole. That's a challenge. As we think about, we tend to think, for instance, Europe may be overbanked. But however, the relative size of European banks since the crisis relative to world players has declined. So, we may have a context which we have a large economy, which is the European Union, that's heavily reliant on banking for intermediation. Mm-hmm. However, we're operating with banks that are below size from other large multinational banks. Does that pose a challenge? That's one question, for instance,
But is the regulatory agenda stacked against consolidation, either within borders or cross borders, in the sense that we've been told that big is bad. We even hear that in the United States with respect to even tech companies. Mm-hmm. But if you combine two institutions, your capital charge is going to be higher than the two institutions separately. And if we look at price-to-book ratios, markets are actually giving a negative rating to cross-jurisdictional institutions. So how do we change the regulatory incentive as well as the market incentive to do consolidation or to grow to European banks?
Right. I mean, that's a real crucial question is, I'll put it in a different way, given that the responsibility I have at the EBA, is regulatory aspects an important factor on this process. And I would say that probably part of it, yes, but other parts maybe not so much. For instance, the reference that you said to the penalty of being large, right. That's not a specific European rule.
Right.
That's the charge on GC fees and things like that. It's a global, large global banks, large complex banks have similar rules. So that in itself is not something European. Now, the effectiveness, coming back to my closer to my mandate, the effectiveness of a single market in Europe, the ability to have the ability to engage in operations across the European Union in the same way as you will do if it really was a single market. That's my mandate, and that's where we need to work to make sure that takes place. And I heard Olivier before making some comments about in the referral CR2, there's inherent tensions between, member states trying to maintain some controls, over the developments that take place for good reasons, developments that take place in the local banking sector, financial sector, and at the same time, they push to try to get a more integrated single market. That's an inherent contradiction, and that continues to be there.
Obviously, net interest margins are under stress because of the slope of the yield curve. When we go to Frankfurt or other locations and make the case that the banking sector is struggling, I hear the industry just needs to find a new business model. Do we know what that new business model is, and we're just having a tough time getting there, or do we not know and we're sort of stumbling through looking for a new sustainable business model?
I certainly don't know. And I don't think it's my role to know. That's what the executives of the banks need to find out, how to figure out to make it sustainable, But I do think, by judging by the outcomes, I said there's large variability that 8-10 years, and I think we will all agree on this, of return to equity below cost of capital. It doesn't look very encouraging. I just mentioned also current valuations of price to books below 1 in corporate. Yes. That also does. These are signals that we get, and I think banks need to work on that direction. Obviously, in a very demanding revenue generation environment, because interest margins are low, also, to be honest, credit in the banking side, the marginal growth of banking activity relative to nominal GDP in Western Europe is not increasing. So there, obviously, the part of the cost has to play a bigger role, But cost has to play a bigger role, better services, more quality services, so that customers perceive that they get value for their money. So therefore, prices might reflect higher margins. Those are, seem to me, that areas to work on.
One big area of cost is technology. We've talked about it. I've been saying about J.P. Morgan spending about $12 billion a year. Bank of America is about $16 billion. Morgan Stanley about $6 billion. Those are the U.S. firms. And I was just in New York seeing them. The amount of technology spend that's going on is off the charts. Is that sustainable? Are we spending it wisely, efficiently? And how, from your perspective, can you steer the industry in a smarter use of technology?
Well, as I say, my impression is that I'm not the one to judge technology. Our approach at the ABA, and this is a basic principle, is that we should not be obviously negative about technology. We should take a positive, constructive attitude, and particularly one of the basic principles, we should be technological neutral. We should try to be careful in the regulations, that the regulations do not implicitly choose a particular technology, but they're technological neutral, at least in their target. Having said that, it is true that the challenge of the transformation of the banking sector, which, as you mentioned, is worldwide, it's not Euro-specific, is there, and that banks need to find this equilibrium between, investing for the future while preserving profitability in the short term and generating sufficient confidence in their business model so that at least they can get the resources to invest on that future. And that's where the challenge is, I think, that's across the board,
One of the challenges, and certainly it's been a topic of our board meetings, is internet platform companies. I mentioned it earlier when I had Jean Lemierre and Fabrizio Sacamani on stage, is competition with Alibaba or Ant Financial that has 600 million clients. They have a market cap larger than Goldman Sachs. They have the money market fund larger than JP Morgan. You have Alibaba. You have Amazon, Facebook now, which has got an interesting twist with Libra. Is there a level playing field with respect to banks versus internet platform companies?
Well, that's certainly our role to try to make sure that that gets provided. I think that puts, to be honest, an inherent challenge in the way regulations is made, and this is worldwide. This has nothing to do with Europe, but basically is that we hear many often, same activity should be confronted with same regulation. And that's a fundamental principle that I think nobody can disagree with. But the truth of the matter is that most of the regulatory framework is not built on activity. It's not activity-based, it's institutional-based.
Right.
I have a mandate to regulate particular institutions, which are banks, payment services as well, but fundamentally banks. And banks engage in many activities. So that's a fundamental challenge that I think there is in the regulation worldwide that we need to address. As I said before, one of the basic principles that we approach from the EBA, is not be negative towards innovation, try to be technological neutral to the extent that innovation comes into place in the regulation that we put forward. Those should be working. The third one you mentioned, and I just adhere to it as well, is try to preserve a level playing field.
Right. The EBA used to be located in Canary Wharf. You were in London. You're not in London anymore because the British have decided they want to leave.
Yeah.
Are you ready for Brexit? Is the European banking sector ready for whatever that may look like? We'll have a new prime minister soon. Are we ready for any outcome?
Well, I hope so. Part of the challenge, as you say, is that we don't know the outcome. So it's
Right.
really hard. It's hard to be ready for something that you don't know what it is and when it's coming.
Right.
Because we thought we were basically ready for April, and it didn't come. So I think that in that sense, I think we need to be always very cautious because, as I said, we don't know the outcome. So it could be a very different outcome. The discovery about that outcome may happen overnight as well. So that's something that you cannot be lenient about. We've been very closely following. We sent in June last year, the EBA sent, out a communication on the areas that they think that needed to be worked, that were not quite ready. I think there's been work on that. Now we're doing follow-up work with institutions and with the national authorities to be at service to make sure that the plans continue to be in place, that contingencies are in place. So let's hope that we are. I think that part of the challenge is that, as I say, we don't know when and what the outcome is.
I hope for the best. AML, returning to AML, we were talking about it in your offices the other day. We have a really strong relationship with Europol. We work with Interpol. We have a Nordic initiative underway. What do you need to do? And you've been quoted in the press about wanting to be more muscular with respect to AML. What do you need in order to do that? Do you need resources? Do you need legal provisions? What is it you need, and what can we do to help you?
Well, I think we need a little bit of everything, to be honest. As I mentioned before, in the review of the legislation of the ESAs, of the EBA, the EBA just got a mandate that's effective January of next year to be between ESMA, EIOPA, and EBA, right, to be sort of like the leading one on the context of coordination of AML practices within the European Union. So we're putting our work plan on this. That work plan basically engages in identifying best practices, fostering collaboration, fostering coordination. But this is implemented within a context that I will put two things forward. One is the regulatory landscape that we have now, as we were saying, I agree with this, is based on the AML directives that have been improved. There's a later one, the AML Directive 5, that's being in place. But that still leaves a lot of room for national legislation. So the national, variability is likely to be high.
Right.
Second, particularly in the institutional structure in which AML is organized, remains very national. There's a large amount of diversity as well. There are a number of institutions that collaborate. There's from the prudential point of view, but then you have the financial intelligence units, then you have obviously customs, other types of parts of the courts or the judicial system, other parts of the national administrative framework that comes into place, and that's very different across countries. So trying to identify what works well, what doesn't work well, where are best practice, that's one in which we need to go. But at the end of the day, if we don't have really a single market, I think this is one of the areas in which we're going to be as strong as weakest link.
Right.
So we want to make sure at least that we have a little of a minimum level of homogeneous legislation that makes everybody comfortable in the union.
But isn't a challenge data privacy? We're moving in a direction where customers, rightly so, want to own and control their data. We're very privacy-oriented. But to solve AML, you've got to share information. So how do you solve this tension between the desire to be forgotten for privacy versus the need to share information across jurisdictions?
Well, I think that here technology helps, right? Because technology before, we had less technology, so we had less requirements for data privacy, but we also had less ability to sort of follow people and understand transactions and things of that sort. So I think that trade-off, that should work in favor of the authorities. At the end of the day, authorities are always going to have to be careful about where privacy, overcomes financial stability or financial crime. And probably complying with the law should be above privacy. Right. And financial stability should be at least somewhere in between to make sure that that's as well. So I think in that sense, I think that technology will be able to help in trying to make sure that collaboration becomes easier, even while complying with stronger data protection regulation.
And I'll give a plug to OSDI. One of our sponsors here is a world-class AI firm that focuses on AML. So we're constantly looking for the best and brightest in the technology front. In our closing minutes, let me just turn to the sustainability agenda. As I told you the other day, it's absolutely taking over the IF. We are green, and we're going to be greener over time. How do you see sustainability, environmental sustainability, and your role in it? And what can the industry do to be greener and more supportive of the environment?
Well, our role there is, the Commission just came, I think it was yesterday, forward with the taxonomy on ESG. We were very active participating in that taxonomy, in defining that taxonomy. I think that's at least a first step, a very good first step. First, we need to know what we're talking about, and when we talk about what good things are, what not good things are, whether green, what's brown, what could be in between. Right. The second aspect, I think we need to have clarity between two different dimensions. I think that when we talk about banks, there's the analysis that needs to be done about how do we manage, measure, and we're sure that we're able to deal with the risks that potential sustainability concerns called climate change, things of that sort, impose on the banking sector. That's one aspect. I would call that the reactive aspect. And then we have the proactive aspect, which is how do we make sure that the financial sector is there and able, to help us go towards the good outcome, so that we can prevent the bad outcome from happening, i.e. to help transform the economy towards more sustainable, more green, so as to avoid issues of higher risk or things of that derived from climate change. I think those are the two areas in which we're going to work. We're going to try to identify how to put standards, guidelines of what considers to be good green financing, what could be the ways forward on that. Also, better modeling on the reactive side, better modeling in the internal risk-based models of banks in their assessment of potential risk on what could be increase in risk from their existing portfolio or from new portfolio that comes out of there.
Europe is way ahead of the rest of the world, but this climate change is a global problem. We need a global solution. We need all of our member firms and all institutions to be a part of it. Is there the risk that because Europe is so far ahead that there's a fragmentation? There's a European approach, and then we have a U.S. approach, and then there's an Asia approach. How do we avoid a potential fragmentation in our what should be a global approach to climate and to financial sustainability?
That always exists, to be honest. I think that's very present. It's very present, particularly in these new problems. I would say that's present in that's present in cybercrime. Right. For instance, another area in which clearly global approaches should be much more helpful, but we don't have the technology there. I think that's a challenge that we need to confront. Unfortunately, the institutional structure that we have at the global level is probably we have a very long history on supervisory. The Basel framework, the FSB is very good and has a long history on that. On these areas, which involve many other agencies and part of the administrations that are not particularly linked into those networks. You know, for instance, for cyber, you need to have a lot of people involved in technology, in security issues, you know, in intelligence agencies. For climate, you need people in industrial policies and other aspects, you know. We need to build a bigger international infrastructure, maybe through the G20 can that work through, but unfortunately, we don't have that existing infrastructure to foster that cooperation. It's something that needs to be built.
Well, let me say, as representing almost 480 firms in 75 different countries as a global entity, we stand ready to partner with you, and I really appreciate you coming by here today. Best of luck in your new job.
Thank you.
Ladies and gentlemen, please give a round of applause.
Thank you very much.